some relief now for those with debt. Reserve Bank Governor Lesetja Kganyago has announced that the repo rate will be cut by 50 basis points to 3.75%.
The Monetary Policy Committee of the Reserve Bank's move mirrors aggressive cuts by other central banks around the world. It's the fourth rate cut of the year as the lockdown batters economies.
The COVID-19 outbreak has major health, social and economic impact, presenting challenges in forecasting domestic economic activity. The compilation of accurate economic statistics will also remain severely challenged. The bank currently expects GDP in 2020 to contract by 7% compared to the 6.1% contraction forecast in April. Even as the lockdown is relaxed, investment, exports and imports are expected to decline sharply.
Well, let's explore this further. We're joined via Skype by IQ business economist Sifiso Skenyana. Sifiso, good evening and thanks for your time tonight. Now, one of the things that also came out of the announcement today is the depreciation of the rand, 22.9% against the dollar since January. Of course, all of this has multiple effects on the economy.
No, absolutely. But I mean, quite interestingly, the rand has recently strengthened against the greenback, primarily because, you know, when you look at the state of the American economy, for example, this week, again, they saw the numbers in millions in terms of jobless claims. I think since the lockdown, they've now got about 38.6 million jobless claims, and that resulted in unemployment spiking 3 times up. On the back of that, also we're seeing other developed economies selling now government bonds at negative yields, which means investors are paying just to be invested in government bonds. And what that does is that it creates what we call an accommodative fiscal environment, or monetary environment rather, and that is also probably one of the things that were a key consideration in terms of interest rate decision in South Africa, because then it means that investors can still continue coming to South Africa looking for the high interest rate yield differential that is offered by by the high yields in our government bonds. And so I think, and that's what we see now in our currencies, that it's actually strengthened over the last couple of weeks relative to the greenback.
And of course, while many economists had pretty much agreed on the fact that there was going to be a rate cut, it's still a decision that the bank has to approach with a great deal of caution. Speak to us there about the considerations, especially when lowering the repo rate, not to go too much too soon.
No, absolutely. And so I think there are a number of considerations. So if we just always go back, that the mandate of the South African Reserve Bank is price stability in context of sustainable economic growth. And so the first question, of course, would go into looking at the state of the South African household and the state of businesses. And we're seeing, of course, that a lot of businesses started closing down. A lot of other businesses have asked workers to work on reduced hours, and our employment numbers are certainly also going to worsen. We've heard the Reserve Bank saying on worst case scenario, we could see up to 7 million jobs lost. And so that then translates into lower household incomes. And so the first considerations, also because our GDP, 60% of it comes from household expenditures, around how do we then create some buffer and some relief mechanism for the household. Then over and above that is the conversation around then the price stability and the price path. And inflation now, their expectations have come back and revised it down, as that we're expecting inflation to come out at 3.4% for the year. We've seen price levels of essential goods in deflation. We've seen price levels of foodstuffs as well also in deflation, and those are all the things in that support the choice around reducing the interest rate, primarily because we don't expect inflation to rise to unsustainable levels for the economy.
One of the things, of course, that we're being told is that this is the lowest interest, it's the lowest the interest rates have been since the repo rate was introduced in 1998. Now, is there a ceiling? Is there a point at which the Reserve Bank will just simply not be able to cut the rate any further?
Well, I mean, as I said, that we're seeing in global markets where they're actually going into negative interest rates. But I don't think in the South African context we're certainly going to go there. I think we're quite far off. And again, monetary policy alone cannot prop up the economy. So it's got to be monetary policy, fiscal policy, as well as investment as a combination then that leads the economy back onto a sustainable economic growth path. And the Reserve Bank Governor, laments over and over again that monetary policy alone certainly is not an economic planning tool in and of itself, but rather it just creates an enabling environment for economic activity to take place at the right level. And so I think the view then is that we certainly would never I don't see how South Africa would get to a point of getting to zero interest rates. It is certainly around and making sure that we've got the right structural framework for sustainable economic growth.
Sure. Perhaps let's just leave it there for this evening. Thank you so much for your time. Economist Sifiso Skenyana there, giving us his take on the repo rate cut.